Zoom. Dot.
Check if it's streaming.
It's not streaming. Oh, you know what? Where Beves? I think it has to be through here,
All
bro.
right, I'm streaming.
You're streaming now?
I think I am. Double check.
Let me see.
Uh, I was streaming.
You are?
Yep, I'm streaming.
Okay, so you want to share the screen? Or you want to see your Zoom?
Junior said he can hear us, so.
Ask, see if they can hear y'all.
Junior said he can hear us, so yeah.
Okay. Perfect. We're all set. Let me put some music on and we'll rock.
Sweet.
Hello, hello, hello. Happy Sunday, everybody. How's everyone doing? Let me pull up the chat. It's gonna pull up the live stream right next to it. What's good, guys? It's an honor to be here today. It is Sunday, February 12th, 2026, and we're about to get started. Let's see. Let me pull this up real quick. Pooh Shiesty. See if it pops up. Channel. Perfect. Channel. Perfect. Cool. Just so I can see our chat. Happy Sunday. If you don't know who I am, my name is Giovanni Munoz. I've been trading now for the last 7 years within Powerhouse, and it's an honor to be here today. It looks like we got Jojo on here. What's good, bro? We have Luis Trades. What's good, Janice? Good evening. How are you? And we have a couple special people with me today. First and foremost, we have Mr. John Luke. If y'all don't know my British brother, y'all definitely need to tap in. John Luke, how are you doing today?
Doing amazing, brother. Happy to be on this call.
Glad to have you on here. And we just have Miguel here just for the show. But today, guys, we're gonna go straight to it. And we're gonna go look into the markets, and I'm gonna be very transparent with you. I haven't looked at what we're looking at for the week. So it's gonna be a first eye type of thing, and see where we land. Let me delete this. Cool, right? So as of right now, Nasdaq is continuing bullish. But before we go on to that, let's go see how we're gonna be doing in news this week. What do we have on news? So if you don't know, we use Forex Factory to acknowledge what news are coming out. News is always the excuse when it comes to trading. And what I usually focus, guys, is usually on the red and orange folder. You can click apply filter. You're going to be able to see USD, AUD. So it looks like a really light week. But again, we are in the middle of war. We are supposedly in a 2-week ceasefire. So a lot of things can happen. But right now, what we're seeing, we have USD news on Tuesday, right, with PPI and core PPI. And then on Wednesday, we have employment change for Australian and unemployment rates. And then Thursday, we have GBP news. So nothing too crazy when it comes to the week. I'm not really expecting too much. But as of right now, if we just go look at the DXY, DXY, when we look at the weekly, I like looking at this in the bigger time frame. It looks like we're still bullish. Markets wants to continue up. Obviously, this is going to be a huge determination on pretty much what the economy does and how this war ends. I don't know if y'all seen this, right? And I'm not a big fan of this, right? But Mr. Trump just dropped his own Make America Great Again, crypto, right? And he's using this as, here it is, right? President Trump crypto, right? President Trump is strengthening American leadership in digital financing. The only reason I found out about this, I was watching the Masters. If you don't know, that's golf. And every hour they were dropping Mr. Trump, the president, say or mention about this crypto. And pretty much, if you invest into this crypto, what they'll do is they'll double your Bitcoin. So it's like a reserve for Bitcoin. But it's called Make America Great. Again, crypto. Let me see if I can find it a little bit more. Actively transforming the crypto capital planet by fostering pro-innovation environment designed to make America a Bitcoin superpower. Right. So on his meeting, right, Soros meeting, that he left, he was saying that he will double anyone's Bitcoin. Right. If you put $100 in Bitcoin, they will double that. Right. And it's very weird because you also have to think of like where they receiving all this crypto. Obviously they have captured a lot of crypto within the year, so my guess is what Trump is doing is pretty much all those cryptos that they've pretty much took hand of, like El Mencho had a couple $billion within Bitcoin. All the Bitcoin crypto they seize, they're trying to have like a Bitcoin reserve for the United States. And if I'm understanding, again, this is very brief, but if I'm understanding this correctly, right, the reason why they're doing this, right, in my perspective, is to have control of inflow and outflow, right? And he said that, you know, there won't be a lot of like Wall Street people. This would be for America, from America for America, which is hard to believe nowadays. You know, everything's so corrupt, especially within the administration, right? Any administration, any politics. So, you know, I just want to see what will happen. You know, that was a really big statement being made. You know, whatever crypto you put in, they will double it. Very, very big statement. So I'm going to stay watching out for crypto markets. And I'm very curious what that'll do to the DXY. Will we lose the DXY? Will we become more of a digital cryptocurrency? And pretty much how long this will take. But for them to be dropping this message every hour during the Masters, it's pretty much for me, it's a pretty big deal, because why would you interrupt, like, you know, a huge championship for just an asset, right? Now, as we go to precious metals, as we can see, you know, silver has been, since we had that high peak back in January 26th of 121, we've been sitting at this consolidation area, which is 72, you know, anywhere from the 62 to 75 area. And when we look a little bit more in depth, obviously, overall, I'm still bearish. If I did want to see a continuation on sales, very simple for me. You know, we grab our fib, and we have our consolidation right here. Right, we have our breaker structure. We liquidate all these sellers that were in the market, took them out as well, took out all these buyers, right? So market liquidated sellers, and then it liquidated buyers, and then we created a low, lower high, lower low, lower high, lower low. So I really like how market has transitioned. Now I can see us reversing back to the 78886 area. As we're able to enhance it a little bit more. Start new. Right, this is the 4 hour. We have a huge push down, which is pretty much the candle that creates new lows. If we go to the 30 minutes, boom, boom, boom. We came up. 15 minutes. This area piques my interest a lot, so I'm gonna bring this around right here. But we also have this area. Actually, I really like this area more. So this candle itself, I really like. We can tell that this is really the moment where extend right. Cool. This is the moment where we can see that market shifted on us. We were still trying to continue up. And ever since this move, this is where market completely shifted downwards. And if we break it just a little bit more, we can see how right, this candle doesn't have a huge wick. So it kind of this one right here, right? You see we didn't wick this body. And we smallly wick this body, but not intensely. So for me, this would be my entry anywhere from the 86 right to the 87 3.20. If you're you know, like having tight risk, you can always put your stop loss right above. But for this trade, for me, it looks like I'm gonna go a little higher. And I'm just gonna put it right here, right at that 89. Right, so for me, when it comes to silver, let's remove this. I want to see potential sales. I want to see us work our way a little higher. Boom. Right. You are looking at a pretty big risk. If you do want to take that smaller risk, it's a good risk. I might even drop it right here. Right, boom. That's fine with me. So we'll put our risk right here at this wick, because I believe if we go higher, the market will reverse, and we're simply gonna go for a 1 of 3. Now if we get ourselves out of replay, right, we want to see this definitely. 222. Right, come up to the zone. Right, again, we are far away. And if we go to the smaller time frames, like the 15 minutes, right, we can possibly enter this one as well, right? If we do plan that the market's gonna go a bit more bullish, there's two zones I see, right? The first zone I see, if we go to the 1 hour, right, we have our consolidation, break of structure, higher high, higher low, higher high, right? So what I'll be looking for is, let me remove this line. It would be this zone, right? Or if we go to the smaller time frames, this would be our risk, right? If we go to the smaller time frames, we see, and I like this because there's a lot of area that we haven't came back for, so I can see a wick and continue going higher. This one right here, I'm still kind of debating, but we do have an impulsive move up. We have our consolidation, break of structure. We liquidated higher high, higher low, higher high, right? So for me, this could be a potential. I would like the lower zone more, just because it makes a bit more sense going down there, liquidate those, pretty much, wicks, right? That liquidity we have down here, which is right here, right? All this liquidity, I would love for it to get swept, but again, we did create new highs. This is the previous low. We can come to this zone easily and continue going higher. If we break it down a little bit more just to figure out that right entry, we can see 222. Let's go to the 1 minute. Possibly potential to come to this lower zone, but we're gonna leave it like that. So right now, when it comes to silver, we have buys and sells. We're getting both setups. First buy is gonna be in the 71 zone. Stop loss is gonna be 69. Second entry, if we do get invalidated in that entry, we're gonna be looking at the 69. Stop loss at 66. As well, as you can see, if we do tend to push higher, we will be looking for that sell at 86.785. Now, when we go to gold, and this is kind of the reason why I also think this is going to go bullish. We had our consolidation, break of structure, higher high, right? We throw our fib on here from the low to the high, and we can see that we came and respected the 7886. I'm not going to wait for this to come back to this area. You know, really, it's at a zone where if we do come back, I've been wanting it to come back right here, right? This green line. So for me, if we do come back, I want to see 44.95. This is a trade that I've been waiting on for a minute. And it's a small risk reward. It's around 130 pips that you're risking. But we can see this being able to continue push higher. And the reason why I'm still confident, we still have a bunch of liquidity creating. We can see the consolidation, break of structure, market liquidates these guys before we create new highs. And then we create more highs steady. And creating liquidity, this is the perfect setup for me. And if we wanted a, just hypothetically, entry to be more exact, right, I would be looking at anywhere from this zone. So we would have a small, much bigger risk reward, and then we would just go 1 or 3, right, for the previous highs, right? So this is what I would see. For me, I would want to go a little lower, around this zone, but this whole zone is valid for buys for me. 45.60. Again, we're insanely far right now from that. So I'm not really keeping any hopes when it comes to that. Now, when we come to oil, oil has been a very interesting thing. We're playing again at 97. You know, who in here is suffering because, you know, I know Cali is it's pretty tough out there. It's probably you know, $6 a gallon. Over here in Texas, we're seeing, you know, low fours, high threes. And you know, it's a very confusing time. A lot of what would I say? A lot of uncertainty happening for the U.S. But I think everything is planned. So we'll see. I'm gonna be honest. If we continue seeing this going higher, you know, what's the highest we ever been in oil? So this only goes back to 2023, but right after, oh no, this was, yeah, right after COVID, right? We were sitting at 127. I'm not gonna be surprised if we continue going higher, just because the war is still going on. There's just a lot of conflict that's not being able to be controlled. Now, when it comes to NAS 100, let's check it out. Two. So for NAS, I had this zone, which came to my zone, continued going higher. Let's remove this. So for NAS, for me right now, I like this. We have our consolidation, breaker structure, liquidated these guys out. Higher high, higher low, higher high was created. If we grab our fib, and we get to this zone exactly right here. The reason why, guys, I want you to understand kind of the motive of all my trades. The motive behind all my trades is where the market hurts the masses, right? So to briefly explain the way I trade, what I simply look for, number one, is structure of market, right? Obviously, market looks bullish on us. We did create lows, but then we are creating new highs, right? This lower low, lower high, lower low, right? Higher high, right? So if market just shifted on us, right? If we created a higher high, higher low, higher high, right? Now we're bullish. Now, once I figure out the direction of the market, which we're bullish, I look for consolidation. So right here, right, we can see that the market is consolidating, right? Support, resistance, you know, you're getting your basic consolidation movements. Right? After that, what I simply look for is a break of structure. That break of structure is your liquidity sweep. What liquidity sweep is, guys, I want you to understand there's money on both sides of the market. Market's going to go and pretty much take both sides. Market's going to push down, liquidate all these people that were in buys and had their stop loss either in break even or small in profits, or, you know, their stop loss was right here, right? They just got liquidated as well. As soon as they liquidate those individuals, the market has an insane push up. So what institutions do, they buy within these areas, right? They manipulate thinking that we are going to continue going lower. Imagine how many people saw this breaker structure. They're like, oh, we're going to continue going lower. Once it hits this area, we're going to continue selling. What the markets do, they then dump a bunch of money. And this is where we get institutional candles, right? Institutional candles, right, are huge candles that have no wicks. As we can see, this one has no wicks, to be specific. So if we play by play, right, this is going to be my zone, right? This whole zone, 15 minutes. Boom. We might get a much faster entry. Okay. Then last one, 1 minute. And then my entries, I've actually been, using Junior's entry model. But pretty much y'all see how these have no wicks, right? So this whole zone would be my entry area right here. And personally, I would just put my stop loss right below it. So we would probably have our stop loss right here. So we're gonna have two entries. The first one is gonna be that one, and the second one I'm gonna insert down below here. This one might be a just responding type of trade, and we might continue higher, but if not, no worries. Now, we've been playing within the zone. We are rejecting. Market did push higher. For me, if it gives me the 101, I'm probably going to sit out. It did hit the entry. This was really a nice trade, nice rejection. Looks like we're at 43 bars. If we hit that 101, guys, personally, I am not going to shake it. So, boom. 24 bars. Yeah, we barely hit the 101. I'm going to sit out on this one. This was a good rejection, good eye. And we're going to wait on this lower entry, right? We're going to wait on this lower entry. I do see this huge wick down. But personally, I'm just going to be patient. There's still liquidity. And there's still much space to come down. But this can honestly continue higher from here if it wants to and not retrace back to probably the middle of the week. US30, a little bit different, right? Same thing, same concept, consolidation, break a structure, higher high, higher low, higher high, right? Just break it down. Little bit different. 222, huge wick below. Let's go back in time. And let's go to the 1 minute. So if we go to the 1 minute, we obviously have the same thing: consolidation, break of structure, new highs being created. So I'm gonna play off here, and we're gonna get out of replay. This play is gonna be a little bit different, right? We're gonna play off that wick because it had a consolidation, and for US30, we are going to be entering buys at 49.65, and stop loss is going to be 49.600. Obviously, guys, like I mentioned, these are much bigger risk, but I like swinging more than anything. So if this is going to work its way back down, we can expect, NAS to work its way back down a little bit as well. SPX, sometimes SPX really has the best plays. SPX, I had this play over here. Looks like we rejected, continue higher. Consolidation, break a structure, higher high, higher low. For me, when it comes to SPX, consolidation, break a structure, we have this liquidity. We're going to play from this low to this new high, and we're going to go off. Let's see. Start new. 30 minutes. And you see how we're breaking it down, guys, to smaller time frames to be able to identify our entry, be able to identify if, in the smaller time frames we do have what we see. So for me, smaller time frames, bingo, right here. Look at that right there. This candle itself. This would be my entry. Right, and if we need to break it one more time, go to the 1 minute. And possibly we'll just use this whole candle right here. So now that we've been able to, break down a lot of noise, and it looks like bad things sometimes, entries already hit. So for me, this has already happened. This has already been filled. So if this has already been filled, I go on to the next one. And kind of let me explain that to y'all one more time. Obviously, I went to the smaller time frames, looked for that imbalance. That imbalance was perfectly in our zone, went to our zone, rejected. Once that's already filled, I go on to the next. It's like, once a new higher high and higher low is created, I play within that zone. So for me, we're going to use this zone now. and our entry is going to be 6,600. And stop loss is going to be right below, which is going to be below the breaker structure. And that's going to end up being 65.34 when it comes to SPX. So just to give you a quick recap, I do want to see silver work its way down before we continue going higher. Gold, same thing. I would like for it to work its way down a little bit more before we continue buying. I do see silver, gold continue higher. I do see oil continuing higher. I don't see, unless the war ends and you know, a lot of things change, I do continue. This is gonna be for NAS 100, right? 2 potential entries, but main entry is gonna be 2,400. Stop loss 23.72. US 30. We're looking at the 4,700, right? 47,000. Stop loss 46,600. Bitcoin, I did catch this Bitcoin play a bit ago, and we're still maintaining. Oh, this was SPX. SPX, same thing, right? We were gonna play this lower zone, but since it has already been filled, we are not interested. So we play the next zone, which is 6,600. Now, again, like I was mentioning, Bitcoin has been playing in the zone, consolidation and breaker structure, higher high, higher low, higher high. This is literally my textbook play. Now you're looking at the weekly. This can be the initiation to work its way back up, or we can work our way a little bit lower, right? Consolidation, breaker structure, boom. Ideally, what I would want is if there's being more money dumped, you know, obviously I would want to see crypto go higher. We're on fear. I mean, look at this green, amazing. Solana, same zone, right? 786. This is where I would want to start buying Solana. I bought a couple at $75. Link, right? These are projects that me personally I'm invested into. And I'm gonna let John Luke go a little bit more in depth when it comes to crypto. But now File, Jupiter, Caspa, everything's still low, still at great prices. And then Tesla and Snap. Snap is looking rough, right? But someone's gonna have to buy it. It's at pretty much all-time lows. You know, you're pretty much, if you buy now, it's a pretty much good risk reward. I don't see Snapchat going anywhere. But that being said, what I'm gonna do, I'm gonna pass it on to my brother, John Luke. John Luke, you there? Mr. Gene, let's get it, brother.
Yes, sir.
I'll let you take it away and go over that crypto section.
Amazing. No, I appreciate it. Yeah, put some tens in the chat for Geo. That was a lot of value, massive amounts of game in terms of what plays we're looking for the following week. And I like what you mentioned about Snap's looking rough, but someone's gonna have to buy it. That was kind of funny. It's true though, someone is gonna have to grab that up at those prices. So I'm gonna go ahead and share my screen. I'm gonna dive into a couple of crypto things, guys. A bit of education, a bit of knowledge, but also 1 or 2 price levels I want you guys to look out for your exchange ideas for your portfolio, which is really key right now because prices are just ridiculously low. And I want to make sure that you have your portfolio structured correctly, depending on whether you're an aggressive investor, a moderate, or a conservative investor. So I'm going to share my screen and we'll dive into a couple of things. So I noticed Geo went over a couple of the charts, a couple of the cryptos. So we'll touch on that nearer the end. But I want to start off with just really brief news because it does relate to us in the crypto market. And that news I mentioned on Crypto and Assets on Saturday with Gil is Morgan Stanley's Bitcoin ETF drew in 31 mil on their first trading day. So a massive amount. Now, on this call, I'm sure we know what an ETF is, an exchange traded fund, right? It's basically a basket of goods, different asset classes that you guys can invest in. And basically, once you invest in an ETF, which is one singular, not stock, but one singular fund, you have exposure to all of the assets that they're invested in. So it basically gives you more diversification, a lower ROI, but it's something that spreads your risks. So that's kind of like the pros of an ETF. And so we know that in the past 1 or 2 years, ETFs have really been a big catalyst to why more institutional money has been in crypto. This is why you've been seeing Bitcoin and larger cap projects move closer to stocks, move closer to equities. It's because there's more money involved. It's not the same market as 2020, 2021, 2022, where people are making $1 million in half a day off a main cap crypto, because it's not as volatile in that way. And so what I found interesting is, as there's more big money in this, I was looking at Bank of America, I was looking at JP Morgan, and I was looking at a couple of the large corporate banks out there, and they've started recommending high net worth clients to invest a percent of their portfolio in crypto. Now, I want to ask you guys a question. I've got the YouTube stream on my iPad whilst I'm looking here, so I can see the chat here. I want to ask you a question. What percent of a high net worth person portfolio do you think these banks are recommending to put in crypto? So I'll repeat it again. What percent do you think these banks are recommending for high net worth clients to put into crypto? Percent of their portfolio. So, I don't know, let's say they've got 500K, 10 mil. Like, what percent of these banks recommending that they put in crypto? Put it in the chat. What do we think? Put it in the YouTube chat. What percent do you think these banks are recommending high net worth people to put in crypto from their portfolio? Are we talking, 80%? Should they put 80% of their portfolio in crypto? What do you guys think? I think there's a bit of a lag, right? Okay. Teresa said 40%. Random guess. Let's have some more guesses. We have 29 on the call. Let's be interactive. What percent do you guys think? Someone said less than 10, 45%. Okay, so I'll give you guys the answers. It's going to surprise you. And the answer, the reason why I'm saying this now is because 2-3 years ago, I would not have mentioned this. Even if I knew about it, I would have probably just ignored it out of ignorance. And so the percent that these banks recommend high net worth individuals to invest in crypto from their portfolio is 3 to 5%. 3 to 5%. So they class a high net worth client as somebody with $1 million in liquid assets, by the way. If you have $1 million in liquid assets, you are now deemed and defined as a high net worth individual or client at Bank of America, JP Morgan, Chase, Wells Fargo, you name it. That's how they quantify it. They say, they're telling them on the phone right now, 3 to 5% of your portfolio should be in crypto max. So why is that interesting? It's interesting because as like crypto boffins or crypto native investors or whatever you want to call it, how often do we look at our portfolio or do we go, oh my gosh, all we hear every day is crypto is the best, crypto is amazing. Trump said he's trying to make America the crypto superpower of the world. So let's put 50% of our portfolio in crypto. Like, guys, like, I just want to bring a reminder, because this was a reminder to myself as well in the past few months, is that the way that old money have become rich is still the way today, It's not a new thing of like, okay, completely switch out all of the old school rules. Like, I don't know if you guys have read the book about the world's richest man. Oh my gosh, from the Bible, what's his name? I forget his name. I completely forget. It's going to come to me. But anyway, like, it shows you principles of how wealth is built over time. And that's not changed. Just because there's this new blockchain technology and it's got all these pros, above fiat and USD, and there's limited supplies and there's more demand. And, once you send a transaction, it can't be changed. Like, it's high security, you have full ownership. All of that stuff's amazing, but we still shouldn't be putting the vast majority of our money in crypto, I'm just letting you guys know, because we still should have a nice setup of stocks, crypto. Maybe, you might dive into something a little bit more risky, like some of the IPOs coming out, like Kraken, the crypto exchange. That IPO is probably coming out in the next year. Ripple for XRP, that IPO is coming out this year. OpenAI, Anthropic, IPO is coming out this year. So they're a little bit more risky stock plays. And in crypto, we can have risky crypto plays too, right? We can have some of the mid to smaller cap projects. We can have something like a VeChain, which Mike Sotero speaks about. We can have something like Immutable X, which is a small cap in the gaming industry. Mike Sotero speaks about, one of our educators. We can have something like Render, right, which is to do with data and AI, and had a secret collaboration with Apple products. Like, we can invest in risky in that. But still, we still got to keep in mind that, are you an aggressive or moderate or conservative type of investor? Now, going back, King Solomon, thank you, Teresa, King Solomon, yes. Going back to what I mentioned earlier is, what type of investor are you and how do we structure that portfolio? So let's begin with this. As a conservative investor in crypto, what are we really kind of looking at? Well, we're looking at having, maybe I should write it down, you know. Conservative. And I'm going to touch on some more value in a minute. Maybe we're looking at something like this, guys, as a conservative investor. And you can even do, yeah, you can do that if you want to. 70% main cap, 20% mid cap, 10% small cap. This is an example of a conservative investor, guys, in crypto, okay? In crypto. Now let's look at a moderate investor. And I want you guys to, once I've done this, I want you to put in the chat what type of investor you think you are. There's no right or wrong here. There's no good or bad as well. It's funny because over time, you do become more conservative, because 2-3 years ago, I was full aggressive. Now, moderate type of investor, you might go for something like this. And it could be 50 to 60, but let's just say 50 for now. 30% mid cap. And then you might do a 20%. I think 20% still kind of high, to be honest. I'm not going to lie. But something like that. I would even change it to like, I would even change it to this, to be honest. I would even do that. 15%. Now you got an aggressive type of investor. Oh my gosh. 2-3 years ago, way too aggressive. I know what was going on in my brain, man. Aggressive investor. Something like, it will pay me to put something less than 40% in main cap. So I'm just going to leave it at 40%. 40% main cap. Yeah. 40% mid. And then you can have 20% small. So this is an example of the 3 types of investors that you guys could be in the crypto space. Notice I'm saying in the crypto space, because obviously crypto should be one part of your investment portfolio, but you should also have others. You should also have a stock portfolio and XYZ. Put in the chat, what type of investor resonates with you the most? Do you feel like you're a conservative? You feel like you're a moderate? Or do you feel like you're a aggressive? No right or wrong. You know, it depends on a few factors, guys. These are some of the things I need you guys to consider before making a decision on what type of investor you are. I need you to consider your age. I need you to consider the disposable income that you have. I need you to consider your assets and liabilities. And I need you to consider your personality type as well. Those are the things that you should consider before making this decision. Because everyone's different. I mean, just think about it. If you're earning $50,000 a year, I don't know, you know, maybe you got a beautiful son, a beautiful daughter, maybe you have a wife, maybe you have a husband, maybe you don't own property yet, maybe you're renting, maybe you're in school, right? Maybe you're busy studying. Like, these factors play a big part, because that's going to depend on what type of investor that you are. And so to begin with, I started off as an aggressive investor. But one of the key things that often happens is, the older you get and the more money you make, the more conservative you become, which is absolutely fine. Now, if we're talking about the entire pie of an investment portfolio, the next thing we need to speak about is stocks. And then the next thing we need to speak about is things, you know, such as retirement and the stuff that PK speaks about that you can also dive into. But what main mid small cap should we even look at? Well, why should I mention cryptos to you? And we have an incredible educator who's recommending what we should be looking at. So I'm going to show you guys, because many of you have not seen some of the live sessions that we have access to. And many of you, if you saw it, you don't have it saved on your phone. So I'm going to show you guys. And I highly recommend you take a little screenshot or something, because I'm going to list out the mid, the main, and the small cap projects that you guys need to keep an eye on. All right. So, oh, all right. I'm gonna get it up. I'm gonna get it up. One sec, family. I got a Windows now. You know, I haven't got an Apple, so I feel like a little bit of an old man. It's taken me a minute to get up the photos and stuff. I feel like an uncle. All right, cool. Let me see, bro. Someone's gonna jar me. Okay, so this is the low in the mid cap. Now let me go ahead and get the main cap. Yeah, I'm definitely getting older, mate. All right, broski. Hey, give me 1 second. I'm gonna find it. I think it's there it is. There it is. Okay. Here's the main cap. Cheeky, trying to hide from me. Okay, so these are the projects that Mike Sotero on the platform recommends, guys. Take a screenshot of that because you need to have it saved. That's vital. This is your list. Like when you're looking at, okay, I got $100, I got 500, I got 2K, whatever it is. I need to add to my crypto portfolio. Where do I go? What do I look at? These are the projects right here. And now you know what type of investor you're in. Now you can go on TradingView because most of us are traders here. We understand how to look at market structure. We understand how to look at POIs, and we can work all of that technical stuff out. To be honest, the technical stuff actually isn't that hard after a few months. Really and truly, it's all the other stuff that we spend the least amount of time on. That's honestly the most important, which is picking the project. So take a screenshot of this because this is vital. And I'm going to speak on a couple of these projects so you guys get an idea just off the top of my brain, like which ones I want to touch on. So, okay, Bitcoin, we know this, right? It's basically the gold of crypto. If Bitcoin moves 10%, all these other projects are going to move 20%, 25%. We know this. Ethereum. What's cool and special about Ethereum? Ethereum is the largest transactional coin. Ethereum has fairly high fees, but it's the most reliable network. So that's a positive. What else can you do with Ethereum? You can stake Ethereum. What does that mean? Well, in stocks, there's something called dividends, which is if you invest in a large publicly listed company that provides dividends, could be like Apple, Amazon, Google, whatever it is, they're going to give you back 3 to 5% a year on top of the money that you have. If you have $10,000 invested in Apple, for example, and it's a 4% dividends, at the end of the year, you get $400 for free just for holding it. Same thing in crypto. If I have Ethereum and I'm staking Ethereum, staking is dividends, but for crypto, I can get back 2 to 3% on my holdings just for holding the damn thing. And you can do that on a place called Rocket Pool. Write that down. Rocket Pool, not Lido. Is it Lido? Yeah, Lido. That is where you have to have like 23 ETHs. I think it's 23, something like that, in order to stake it. That's the minimum. So you want to go for Rocket Pool because you can have 0.01 ETH. You don't have to, the minimum is a lot lower. So the barrier to entry is lower, which means that you can actually stake it. You'll get 2 to 3%. Now, I know it sounds boring. I know you're like, oh, what's the point? 2 to 3%. That's like $20, $30 for me. That's like $200, $300 for me. Like, what's the point? Yeah. Well, the thing is this. Whenever the market downturns, which has been downturning for a long time, how else are you going to profit in investments? You can't. You can't. You can only profit from leverage trading, from selling it down. But when you're investing, you're just holding the bag, aren't you? So how can we make some income? Well, we can stake it. I'll give you guys an example. Won't talk specific numbers, but on Kusama, for example, Kusama, is it here? Let me see. Yeah, see, yeah, peak, right? Kusama's not even here, but it was here a few years ago. But anyway, so I was invested in Kusama, still am. It's the test network for Polkadot. Polkadot's the layer 1, Kusama's the layer 2. Test network means it's where all the blockchain developers go onto that network to test out their project to see if they want to use it on the Polkadot network. And if they like it, great. If they don't like it, it goes. That's what Kusama's for. That's the utility. I was staking Kusama. I still am from 2021 or 2. I think it was 2022. And I forgot about it. I completely forgot about Kusama. I promise you. I didn't even realize. Because on Kraken, you have to go on a separate part to see your staking assets. And then I realized, I was like, by the way, Kusama's been doing terrible. I'm not even going to lie to you. Like, Kusama's doing bad. This is why it came to my brain. And I'm going to show you guys real quickly. It's a good example. I don't even know. Here it is. Kusama, like, look. It's been falling off a cliff. Just real talk. Now, I'm not going to lie to you. when I invested in Kusama, it was a lot higher, like a lot higher. So it's not too great. But let me tell you one thing that it did do good though from 2022. From 2022, because I was staking Kusama, I was getting about 16 or so percent back every year just for holding it. Just for holding it. So imagine this, right? Let's say I'm down 50% on Kusama. Oh my gosh, I would pray to be down 50% on Kusama. I'm down a lot more than that. But let's just say I was down 50% on Kusama. I'm getting 16 or so, maybe closer to 20% every year back on it. So when I check the portfolio now in 2026, right, 4 years later, I realized that, oh my gosh, that was almost 5 figures just from staking the project, even though the project fell off a cliff. So it went really, really bad. But because I was staking it, it didn't even it out, but it helped me out a little bit. Like the loss wasn't as deep. Is that making sense? Put a 10 in the chat if that makes sense, guys. If you guys see what I'm saying, like staking is bigger than just the small percent you get back. It's actually the ability to combat a poor investment. Does that make sense? Because you're getting tokens back, right? I know there's a delay, so I'm just going to assume that makes sense. Oh, we have 8 minutes left. See, this is the problem. When Jean-Luc co-hosts, I'm just going to go on and on and on. 8 minutes, man. I have to come back another week. But either way, so these are some of the projects, okay? What else can we speak about? We can speak about Solana. I had the chart up for Solana, actually. I think below $67. Below $67 is a good buy. Let's have a look. I know the leadership are going, what? Gene's on the charts. What? I didn't know you was, yeah, man, on the charts. All right, cool. So below $67 is where we're looking at. And also this like POI area. Basically anything between like 60 and 40 is ideal.
I like that. I like that a lot.
Yeah. Sweet. There we go. That's what we're looking at. So be patient, because my personal opinion is I think Bitcoin's going to come back lower and break this structure, to be honest. I think that's more likely than unlikely, but we'll see. There's a big imbalance up there. Maybe it goes up there first, then comes back down. I'm not too sure, but I'm feeling a little bit bearish. A couple of reasons, really. Number one, April the 29th is the next FOMC meeting. That's when they set the interest rates, right? And that's the last time Jerome Powell's going to do it. After that, we got a guy called Kevin Walsh, and Kevin Walsh is more hawkish than dovish. I don't know if you guys know what that means. They say, if you watch CNBC, or like any of that news stuff, like I don't watch it for like news, like the war and stuff. I watch it for like economics and things, right? But basically, hawkish simply means that Kevin Walsh, the new Fed chair, he prefers to raise interest rates in environments where there's high inflation. So high inflation, right? Like, I don't know if you know this, but each country, the goal is 2% inflation. We know they never make it. It's all a lie. They'll say inflation is 4%, but it's not. It's like 8%. But either way, right? The goal is 2%. But as inflation is rising, because the economy is doing better in America and there's economic growth, what happens is that the Federal Reserve need to manage that inflation and bring it down. So they do that by raising interest rates, because people want to save, not just people, really, institutions want to save money, because they're incentivized because there's higher interest rates. So if I'm a big business and I've got $1 million and interest rates go up, I'm going to be like, oh, instead of spending that million and putting it into the economy, raising inflation, I'm going to put that million in the bank because I'm getting higher interest rate. If the interest rate is 3%, guys, that $1 million, I'm getting $30,000 back for just holding my money in the bank. I'd rather save my money. That's why the Fed raise interest rates when there's a lot of inflation. Kevin Walsh, the Fed chair who's coming in, he prefers to do that. He's a lot more conservative, whereas Jerome Powell isn't as left. Even though Jerome Powell's conservative, this guy coming in is more conservative. So that's why I say about the current economic environment. But back to what I was speaking about, some of these projects, yeah, like ICP. Okay, we know what it does. Like we know there's utility, but that's like a riskier play. Biggest thing to mention: don't confuse size of a project with level of risk. Do not do that. Often we say, oh, if the project's bigger, then that simply means lower risk, lower ROI. But you know, like higher possibility of seeing returns. It's not always the case. Why? Look at ICP. ICP has a lot of money involved in it, but I would still say ICP is one of the riskiest out of this group. I'm just being honest with you. I'm not saying it's bad because I got some ICP, so we hope it does well. But that's what I'm saying. I'll be honest with you. I actually prefer Ondo. I prefer Ondo to ICP. Why? Because the thing is this: data AI based projects, yes, they are faster growing, and this is the next gen. However, people forget that there's a lot of AI related projects that are going to fail in this boom. The same way the internet in the 1990s, everyone thought, oh yeah, it's going to do amazing. A lot of companies failed. Like all we hear about is the Google and the Amazons, but you don't know the 99% that flopped. I'm not saying ICP is going to be that. That's a good example. I prefer Ondo. Why? Because Ondo is a project that has, I think it has a lower market cap, but the biggest thing I like about Ondo is that you're tokenizing US debt. Think about it. You're tokenizing US debt. The only way for Ondo to really flop is if the government defaults on their debt. The government has never defaulted on their debt in their entire life. So, like, it's not really going to happen. You see what I mean? So, like, that's why I personally prefer Ondo. Casper, I don't know massive amount about Casper, but, heard good things on the platform. Haven't really researched too heavy. But with Casper, there's an exchange idea. This is kind of the POI area. It's basically below, like, 0.03, TP1, 0.8, TP2, 0.2, something around that level. Guys, if you get 3x in crypto, take out most of the money. Just being honest, take out most of the money. Like you ain't got to hold the bag forever. I'm saying this because I saw what happened when you don't. When I was in college, I should have taken it out. I didn't because I thought I was going to be a millionaire. So make sure you guys be sensible and reasonable with the returns you get. Especially right now, right? Because everyone's alt season. Like we've always wanted it. But how long have we been waiting for alt season? It's been this cycle has been so extended. It's going to happen eventually. It's inevitable, but we can't wait on that. So if you guys see a 2 to 3x, you definitely need to take some profit off the table. At a 3x, guys, I would say take the majority out. At a 2x, I'd say take some out. That's just my personal opinion, but it depends on the project. Obviously, you've got Chainlink. Gio spoke on this as well. What can we say about Chainlink, guys? I mean, we absolutely love it. I got TP1 here at 16, TP2 at 25. Depends on your entry. People ask, where do we put our TPs for exchange ideas for investments? So many different ways. Number 1, market structure. Number 2, Fibonacci extensions. Number 3, ROI. Risk to reward, like 1 to 3 or 1 to 5, whatever it is. Those are just different ideas that you guys can use. And then number 4, technicals, right? Like you can go deeper than market structure and look at imbalances, look at POIs, look at mitigation levels, bunch of stuff, right? Now, finally, just to wrap up, would love to speak more, but, trying to get better at sticking to the time. I want to show you guys this. This isn't my portfolio, by the way. This is just a default portfolio. But basically, you guys should be tracking your investments. Now, this is not a live tracker, but this is showing you the asset, the crypto asset on the left, the exchange or the wallet that you're holding it in, the principal value, which means what you invested in, the asset price, right, of what it is. The asset price, the quantity of tokens that you hold, the real price, which basically means the price of your investment today, right now. But this column is obviously interchangeable because it changes day by day, right? And then it's showing you the profit, the portfolio weight, the blockchain, the market cap, the cap size, mid, small, or main, and the industry. And then we have these pie charts at the bottom. I say we because can't take credit for this. Me and Gil, we've done it together. So this is something that we have. Shows you the industry and XYZ. This is useful, right? Because there's a concept called know the score. Learned it from this guy called Kevin Trudeau. And basically it's just like any businessman, any investor or trader, because you should treat your trading like a business. You should treat your investments like a business. You need to track the data. You need to know the data. You need to know the score. You need to know the numbers. Now, remember this quote is, if life, they say life is a game, right? Life's a game. If life is a game, and you own your life, which you do, not to be too esoterical, then you get the choice to make up the rules. So you make up the rules for your own game, for your own life. Same way you make up the rules for your investments. So what is a good or a bad investment? You decide, like, it's your rules. So I'm saying that because it's better to set a smaller goal and hit the goal and feel accomplished than to set a big goal, never hit it and feel bad. Because you need to get the ball rolling. Like when you're in a car, you need to kick start on the engine to kickstart the car to move. So you're not going to kickstart the engine in the car and have it moving if your goal is, I'm trying to take $10,000 to $100,000. If I don't make $100,000 by the end of the year, I'm a failure. Like that's not going to work. Why don't you go from baby steps? I'm trying to take 10,000 to 15 by the end of the year. You know you're going to hit 15K by the end of the year. How are you going to feel when you hit 15K and it took you 6 months, not 12 months? You're going to feel amazing. You got the ball rolling now. Now you can set the next goal. So when it comes up with this data tracker thing, like be reasonable with it. Understand your TPs and stick to them. But yeah, this is something I can share. That's why I wanted to share it with you. If you're in the Powerhouse community, you get this for free. If you're not in the Powerhouse community, this is going to cost you $50,000. I'm joking, it's not. I'm joking, it's not. Just tell me. Nah, I'm kidding. But basically, you guys get access to this. You can track all of your information. I'll share it in the private Discord. But that's all that I have to give. Was not. I actually have a lot more, but another time. And I hope you learned something. I'm just going to pause there for now. Put a 10 in the chat if this makes sense. You think Chainlink will go lower? That's a good question. I think if Bitcoin goes lower, Chainlink goes lower, and I think Bitcoin's going to go lower. So I'm going to say yeah. But don't wait for Chainlink to go lower, though. Ooh, it's not good to do that. Just have some exposure now, you know? But put a 10 in the chat if this makes sense. You guys learned something. Yep. Put a 10 if this makes sense.
Mad knowledge, bro. Appreciate it.
Amazing, amazing. Cool. So I'm gonna stop sharing. Sweet, amazing. Hope you guys got some value. Gio, yeah, let me know if there's anything else that you wanted to mention or close out. I appreciate you guys. One last thing to mention, actually, can't forget Portugal convention. I booked my ticket. For Portugal, guys. It's gonna be incredible. I booked it the other day. I was on the phone to my boy from England. I told him, listen, I'm coming back in June, brother. I'm not coming back unless you get your freaking ticket. He said, I'm getting it tomorrow. I said, say less. I'm going to see you there. We're going to have a packed out Airbnb with a bunch of British guys. It's going to be like UK, America. Coming together. It's going to be like 2021, 2022 all over again. God knows. But yeah, so I appreciate you, family, and we'll see you on next week's call.